This is the Cleveland Real Estate Investor Podcast. On this episode, Mike Reilly and Mike Ferrante go back and forth on the recent updates with the coronavirus and the impacts on the real estate market. Stay tuned.
All right, good morning, everybody. It's beautiful day in Cleveland. Sunny skies, temperatures in the 60s, probably get up to a high of 72 today. No humidity, crystal clear, nice little soft breeze. This is why I am always amazed that people go to Florida from Cleveland in the summertime. So with me is Mike Ferrante of the team Mike, Century 21. Good morning, Mike.
Hey, good morning, Mr. Reilly. 21 Mike team, 21 Mike here.
21. I always get the team. It's a team Mike, team 21, 21 Mike, team.
Yeah, so. It's kind of funny. That started, my wife came up with that. It was for my website, actually. We came up with the website, 21mike.com. And then when I formed the team, it was just a natural progression to be 21 Mike team.
Yeah. Well, let's talk. It's been a couple weeks since you and I did a podcast together. So Cleveland Ohio has reopened a couple weeks ago. And unfortunately, learned the other day that Dr. Amy Acton, resigned her position as Mike DeWine's health director for the state. She did a phenomenal job, as did Mike DeWine, who has my lifetime vote for governor. And Cleveland and Ohio has really, knock on wood, weathered this COVID. We are now reopening in a smart way. Your thoughts on the COVID before we start getting into the impact on real estate?
Yeah, I couldn't agree more. It was a no-win for the politicians involved, because if they, did what they did, people are going to criticize them because they overreacted. And if they didn't react strongly enough, they're going to say, see, you should have done more because all these people died. From my point of view, real estate focused, of course, we barely missed a beat in real estate, and I think largely thanks to their actions.
Well, my wife has a very good friend who's a realtor, and she does a lot of more of the high-end realty with Howard Hanna. And she was telling her the other day that she has never seen the Cleveland market as white hot as it is now for real estate. Well,
it's interesting you say that, especially with her being in the high end, because it's almost a tale of two markets right now. You've got the overall market, and particularly, let's call it 400,000 and under, where you've got barely 2 months of inventory. And then when you run the numbers in the way I ran them, calling it the quote luxury market, 600,000 and up, you got almost 12 months of inventory. So everything that's, call it affordable, you're, like I said, 400,000 and under, it's moving incredibly fast. But when you look at that luxury market, it is kind of slow there. Overall, the market's very healthy, but it's just interesting, the discrepancy, the disparity between the two price ranges.
That's a good point. And I guess I didn't delve deeper into what my wife's friend was saying. I mean, I didn't talk to her, but that seems to make a lot of sense. I'm seeing a lot of high-end homes. Cleveland East Side especially has a lot of just gigantic mansions. The turn of the century, the 1900s, when Cleveland was, the Silicon Valley of the United States, with Rockefeller and Carnegie and all the lawyers and bankers and everybody that worked, with those gigantic titans of industry. Cleveland was one of the top 5 cities in the country. So You see all those legacy mansions. I'm talking, 20-room bedrooms, 6 bathrooms, along Fairmont Boulevard, Shaker Boulevard, North and South Park. You wonder where the market is for for a buyer for those homes. But like you said, the under 400,000, which even in Cleveland is kind of rich. You get under 300,000, the Fernway area and Shaker, those 4-bedroom, 2 baths. I mean, they just seem to be flying off the market with multiple offers.
Yeah, we're working with a buyer right now who's shopping in the 150 range, which is about the average sale price in Cuyahoga County, and we can't find her anything. Everything we rush to, and there's multiple offers. There's just no inventory for these people, and no inventory. What does that mean? That just means that you go out there and look at a handful of houses, and either they don't work for that buyer, or they're not priced right. And then when you do find one that works, you put your offer in, and she's been outbid. I don't even know how many times now. But that average price range of 150, that kind of tells you about our market. So, even at 300,000, that's still very, very affordable. But those listings don't stay on the market if they're priced right and prepared properly. As compared to, we have one that we had on the market about 10 months. Right around $1 million, and we finally have an accepted offer on that after 10 months on the market. So
Wow.
that's very typical right now for what's going on here.
Wow, that's amazing.
Yeah, it's different. We're not used to that here. It's been going on now for the last year to 2 years, but I think people are still adjusting to that kind of market because that's not typical for Northeast Ohio.
Now, so you would agree that the virus has actually been impactful in a positive way for the Cleveland real estate market?
I guess I wouldn't say positive. I would just say it hasn't been as negative as a lot of people thought it might be. So I'll give you, I'm all about numbers. I know you like data also. I've been watching the numbers very carefully, and year over year for the time of the lockdown here, the stay-at-home order, we were down about 17% for number of sales. Now, a lot of people thought, the bottom's going to fall out of the market, prices are going to plummet, we're going to see a 50% drop in activity. That didn't happen, and frankly, I didn't expect it to happen. So I guess I would call it a positive because it wasn't a catastrophe, but we're already seeing that pent-up demand starting to cause activity burst at the seams. People put things on hold, and now they're back out in full force, and then some.
Right. And you've got interest rates so low, down to zero. I mean,
yeah, it's amazing. We just had a buyer get a 2.99 interest rate on a 30-year mortgage.
Right. Now, for somebody who's buying a house for, say, 150, and let's say the taxes are average, we're not talking, super expensive property taxes.
Yeah, and for a barometer there, you're looking 200 to 250 a month is average here in our county.
Okay, so that puts you around, So let's use that. What would be the monthly mortgage with taxes and insurance? And what would you go for insurance? About $75, $80 a month?
Yeah, that's about right. So you're looking $850 a month.
$850 for a $150,000 house?
Yeah, $850, maybe $900.
Wow, that includes taxes?
Yeah, taxes and insurance included. It's ridiculous. We have another buyer, 170. Her payment's going to be like $1,040, I think it was, and that's at 170. Wow.
And that is, it's been a long time for me. The properties we buy, of course, we're buying in cash, but it's been so long since I've had the conventional mortgage because we've been in our house for 36 years. And I remember when we bought our house in 83, just gotten married, and interest rates were 16%.
Wow.
Think about it, 16%. That was in the Paul Volcker, Ronald Reagan. They were just squeezing inflation out of the economy. And talk about Amy Atkin and the virus. The virus at that time was inflation. And, Volcker had just jacked up the interest rates with Reagan's blessing, and they just squeezed out inflation. And as a result, when we bought our house, I was able to get a lower down payment because we went to a adjustable rate mortgage.
Mm-hmm.
And because I had a feeling through my couple of classes in economics in college that interest rates were going to, gradually start ticking down. Everybody thought I was crazy not locking into an interest rate because they thought interest rate could go to 20%. So it's really interesting, the whole market. You know what? But let's continue on this thread with the Cleveland real estate market, which you have the benefits of the Cleveland Clinic, a smart governor working with a smart health team, and you have a very affordable housing in a city whose main industry is healthcare, is the health industry, right? I mean, those are all just strong factors in promoting Cleveland as a long-term investment.
Yeah, I couldn't agree more. Yeah, I'm always amazed at the reaction of people that move here. They just can't believe what they can buy with the money that they have. They're just amazed by it.
Right, and I think they don't understand what it's like to live here in the late spring, summer, and early fall. I mean, it is really beautiful here. The number of days we get in the 90s are few and far between. I mean, I've got central air, but most of the time we don't even run the central air. We run our indoor fan, which is mounted on the ceiling on the second floor, just draws in that cool air at night when it's in the 60s. It's just a beautiful probably 6 months, 7 months out of the year. And of course, you got a white Christmas usually in December. You got the change of seasons in, November. So, the really crappy times to be here is, January, February, and March, maybe early April.
And I don't think even March isn't all that bad. And another thing, Mike, I would argue that autumn, here in Cleveland is one of the most beautiful places in the country. Yeah. Now it's a very short window where you get that peak fall foliage, but people come from all over, to see the leaves change, and you go to places like Hocking Hills and get a little bed and breakfast or a cottage or something. But good luck booking something that time of year because everyone's here looking at our fall leaves. Exactly.
New England gets all the the reputation for the foliage, but Cleveland is right up there. This whole area.
And think about all the parks and golf courses we have. Per capita, I don't have the numbers at my fingertips, but I've heard and I've read that Cleveland has more golf courses and parks, depending on what kind of area you measure, if it's Northeast Ohio, but one of the most, prolific areas for parks and golf courses of anywhere in the country.
Right. And you also have a lot of neighborhoods that are on the verge of appreciating. My neighborhood of Forest Hill, which we're going to launch an initiative this year, is just ready to burst because it is minutes from University Circle where the clinic is. You could ride your bike there. You could ride your bike to the lake through, down MLK through the parks. It is, and the housing stock's just incredible here. So, all right, well, enough of the Chamber of Commerce rah-rah about Cleveland. Let's flip over to the $1 million market for investors because my California investors, they look at a 4-bedroom in my neighborhood of Forest Hill, a 4-bedroom, 3-bath, custom built, whether it's a Rockefeller mansion, kind of a brownstone built in the 1920s, or the mid-century modern Frank Lloyd Wright style house, which there's probably about 200 of them in Forest Hill. They were built in the 50s, all custom. They look at these homes and they say that would be $1.5 million or $2 million in LA. But you've got houses that they can pick up for $1 million, between $800,000 and $1 million. Okay, let's take a break and talk very briefly about one of our sponsors, Team Mike with Century 21 Realty. I've worked with Mike Ferrante for over 10 years. He's smart and his team is energetic. Mike doesn't show a house, he sells a house with proactive 21st century marketing, such as 3D showings, which during this pandemic is becoming a real game changer in the real estate industry. So if you want to sell your house fast and at the right price, call Team Mike at Century 21 Realty. Okay, back to our show. If you were an investor, would you take the opportunity to buy $1 million house and convert it into a super, super high-end Airbnb?
Wow, I hadn't thought about that. I'd have to run numbers on it. My guess is that the return on investment wouldn't look all that good on paper.
With the maintenance and everything.
Yeah, I just don't know that the numbers make sense, and I would assume that you would finance it, so that would make the numbers a little better. Um, but I think by the time you look at the maintenance and the management of it, I don't know that that's the sweet spot for
Right.
investing. I look at a neighborhood like Forest Hills, and the surrounding the Heights area in general, and I think that's where the home run is. I think the home run is in that 100 to say maybe 300 range, and whether it's a long-term rental or you do something more like an Airbnb, that's where I think the cash flow numbers really start to make sense.
Now, in our earlier podcast, we talked about the economic impact of the virus. I mean, we were, for lack of a better phrase, shitting bricks a couple months ago. We didn't know which way. The market was crashing. This virus was something that, we had never seen swooping through. Restaurants were closing down, travel, industries were just getting destroyed. So, it was a pretty nervous time. Yet the real estate market, unlike 08, 09, really held strong. That was one industry that was at least holding its own, kind of like buying stock in Walmart or a grocery store. People are going to need shelter. They're going to need food, utilities, Wi-Fi. What's your thoughts? Going forward on the what's your thoughts about what the economy is going to be looking at the next 6 months?
I've talked to people, like I talked to one guy who was saying, "Oh, we're not going to see a V-shaped recovery after this." And what are we seeing? A V-shaped recovery. Now, what amazes me is how long we've been in this good market. It felt to me like, okay, here we go. Here's the start of the recession, the next recession, because it's not if, but when, of course. And I would have bet money that this was going to be the beginning of the next recession, that unemployment would stay high, that people would start losing their houses again, and that we'd see some kind of, several year long dip in, GNP and all that stuff. But, it's got me believing again that maybe all the action that government has taken is going to postpone the next recession. And if I could tell you exactly when it would start, obviously I'd probably be on a different podcast, something more national.
Yeah, exactly.
But, so next 6 months, though, to answer your question, I don't see anything changing in the next six months. I think there will be something that happens that triggers the next recession, but frankly, I don't think it's going to impact real estate the way that the recession of 08 affected real estate.
You know what? I'm going to disagree a little bit with the V-shape. I think there's no way we're getting a V-shaped recovery. No way. I really think it's going to be, at best, for the rest of the year, more of a big, gigantic U, not an L shape where it's going to be flat. It may be a W where it goes up and down, up and down. But, going out to dinner the other night at L'Albatross and just seeing the limits how many people they could put in that restaurant on a patio and then inside. I mean, that's just not sustainable for a long time. I mean, that's a great restaurant, very popular. Zach's done a great job with the health, maintaining the health and taking your temperature, and everybody's wearing their mask. But you look at the news today. I mean, Mike Pence had stopped over to the campaign headquarters in D.C. A couple days ago, and everybody's packed in this room. No mask, no social distancing. I think there's a lot of people who just are blowing the virus off, and you're seeing these hot spots jumping in Florida and in Texas and in Arizona. We're not even talking about a second wave. We're talking about a first wave, and how that's going to impact on industries like travel, airlines, hotels. You've got to wonder whether you're going to see more supply chain problems developing as these other states are hit. I really think that we're going to be in a long recession for the rest of the year. I think unemployment's going to be somewhere north of 10% because industries are just not coming back. Retail, forget it. I mean, who would want to go in the store in the fall as the second wave starts shooting by? So in real estate, contracting where we are, grocery stores, Walmart. I think those are going to be, I think they're going to be good shelters, for your money. And I think Cleveland, with its healthcare and its, even the race relations in the Cleveland area have always been very, very good. The black mayor. I'm not saying it's nirvana here, but I think
Right.
I think the Black Lives Matter, especially on the east side. The east side has been extremely diverse. The Orthodox Jewish population, black, white, mixed, Asian. It is really a goulash of races here in the Cleveland Heights Shaker area. So I think investing in Cleveland is going to be the way to go in a recession.
Yeah, and I think that's typical for when this. And I guess when I think about the recovery, I relate it to the stock market, and I know people that were freaking out because they lost 40% of their value of their mutual funds, their whatever their portfolios consisted of, and they're telling me that they're back up almost where they were when COVID started. But when the stock market tanks, people tend to look for those quote safe investments, and that's what you're talking about. The Walmarts of the world, and of course real estate. Real estate, other than '08, there has never been a recession other than '08 where real estate just lost all its value or a huge chunk of its value. You look back historically at the last 5 recessions. Other than '08, there was only one other recession where real estate lost value, and that's on a national level, and real estate lost 1% of its value.
Right.
And that's fact. That's based on numbers. I actually saw that study, and it was '08 was a huge loss. I believe it was something like on average 20-some%. And then other than that, 1% in one other recession. Throughout the other 3 of the 5 last recessions, real estate actually went up in value.
Right. Yeah, I agree. That's a safe harbor. If you're a young person, and I say young, late 20s, early 30s, would you be buying a house?
100% yes. The buyers I was just telling you about, the 150 and the 170, these are, and I'm going to call them kids. You guys like you and me that are our 20s are in the way back in the rearview mirror. These kids in their 20s I think are making the smartest investment of their lives to date, locking in a rate of 2.99 on a 30-year mortgage, to buy their first home in their mid-20s. I think it's genius.
Yeah. And okay, so what areas would you be looking at in Cleveland?
It's tough because of the inventory problem, but right now, there's not a bad area of Cleveland. There's a couple areas that I could single out and say, well, I might avoid here or there. And I think that probably correlates to crime. If I were going to look at Cleveland, I would say, well, for my safety, I'm going to avoid these areas of high crime. But I know investors that are thriving in those areas. So I guess it depends what your ultimate goal is. If your goal is to establish roots and eventually raise a family, that's one thing. Now you're looking at schools. If you're a single female, then I think you look more at things like safety and maybe public services. The other thing we didn't really hit on today, Mike, but we seem like total homers for the city of Cleveland. Meaning that we are, like you said, the Chamber of Commerce. But one of the things that's really cool about our city is how commutable it is. How we can get from one side of town to the other. It's not like LA or New York where you just can't travel the city. So, you work down at the Cleveland Clinic. Yeah, you want to live in the Heights area. That's a really great commute. But frankly, if you lived in Lakewood or Berea or any of these other suburbs, you could still get to the clinic pretty quickly because of how easy it is to travel around our city.
Right.
So I know that's not a great answer, but it's hard to find a bad spot.
But here's the new factor is Zoom. We're doing a Zoom chat now. So not only is the commute better in Cleveland, but it's now may not even be a factor. And you're living in Forest Hill where I am, and I'm sitting out on the deck. It's quiet. There's birds everywhere. It's a lot of trees here, close to parks. I'm doing Zoom every day meetings, and so are you. You're going to have a lot more virtual this and virtual that going on. So I think being in a safe neighborhood, in a quiet neighborhood, in a neighborhood where if you're going to commute somewhere like to the clinic, maybe you ride your bike there as opposed to taking a car.
Well, it's kind of interesting you mentioned that, because we were just on a coaching call yesterday, and my real estate coach was talking about how the real estate gurus are watching the behavior of buyers in the market. So for a while, there was this trend to move downtown. Everyone wanted to be downtown in a loft, in a warehouse building, and be on top of each other in big buildings. And, now there's a new trend. People are realizing, well, maybe it isn't so great to be all clustered in one area. And so there's this new trend of people moving out of the cities into the suburbs. And what you have pointed out is you have people moving from places like New York City to Cleveland, and if not permanently, temporarily at least. So there's that different sort of change in the way people are behaving in the market. So that'll be interesting to watch too, to see if that trend continues.
Earlier we were talking about economic trends. You were talking about a V. I was talking about more of a long U or even an L for this year. But I think the hovering over this, the 800-pound gorilla in the room, is the virus. And we are as much in the dark now as we were in January. I mean, it's just extraordinary when I think about how, my wife and I went down to Delray Beach in early March. This virus was just exploding in New York, and people didn't even know it in New York. So a lot of the health people knew about it, and de Blasio's gotten a lot of blame for blowing off his own health people. But we're still in the dark in terms of the impact, that how long this virus is going to be around. They talk about a vaccine, and epidemiologists that I've talked to or listened to on CNN or MSNBC have been pretty adamant that that's a year off a vaccine, and that's like a moonshot. They're going on the moon in a year. We're still trying to get a vaccine for HIV. What does that tell you? How hard a vaccine is. So there is so much disinformation, social media, rumors flying around. You watch CNBC, every time there's some little news clip on a vaccine or a viral drug hitting the market for Moderna or Merck or the other big pharma companies, the market goes up. But the reality could very well be that this is the new normal for the next year. And if that's the case, the impact on downtown living, you're not necessarily going to want to be out in the pastures, like in Cleveland, out in Bainbridge or Chagrin Falls, because now could be far away from the clinic. You want to be close to a major medical hub, but you don't not want to necessarily be living on top of each other. So that sweet spot and where the virus is going to inform you about where to buy in Cleveland. Safe, close to the clinic, not on top of each other.
Yep, I agree 100%. And, we could talk about any number of cities that fit the bill, one of which, of course, is Cleveland Heights. But, as I look around, our $150,000 buyer, for example, she has targeted about 8 different cities that would be acceptable to her. Now, she's got some different criteria in mind. I think I told you they've got one person who works in Westlake and one person who works in Solon, which is, probably 35-minute ride. I don't know how many miles it is, but it's one side of town and the other side of town. But they can buy a house in any number of suburbs that they can get to both works in 20 minutes. And,
Right.
These are nice kind of working class neighborhoods, affordable housing, that 150 range. And if they wanted to get somewhere like the clinic or downtown, it's 20 minutes.
Right. Well, we're going to have a follow-up podcast on this. I'm going to be talking to our New York tenants who have been staying in our Airbnbs for the last couple months. I've got some really interesting people in all walks of life. I've got a guy who's an actor. His wife's a Broadway actress, and she grew up in Cleveland Heights, Shaker Heights area. And then I've got another guy who grew up in New York and in the city, and they're working remotely. But I'd be interested in their take on not only on Cleveland, as the Chamber of Commerce, but also what their thinking is now after living here for a couple months. Would they go back to New York? I think that's going to be a very interesting take. So
I can't wait to hear that.
Yeah, later in the week we'll be releasing that. So all right, Mike. Now I'm going to let you get into your yard work now.
How'd you know?
I know you're chomping at the bit. So thanks for your time, and we'll catch you later.
All right, Mike, and go enjoy the sunshine.
Okay, talk to you later.
Okay,
Bye.
Yep, take care.
Thank you for listening to the Cleveland Real Estate Investor Podcast. For more episodes, go to www.reilly-properties.com, or you can search for us on your favorite streaming services like Apple Podcasts, Overcast, Spotify, and more.